Thank you for joining us on Business Now. I am Perpetua Fasami Peter. And now the news in detail. The policy on restriction of daily cash withdrawal takes off today, Monday, January 9. Under this arrangement, the maximum weekly limit for cash withdrawals across all channels by individuals and corporate organizations is now 500,000 naira and 5 million naira respectively. According to CBN, anyone or organization that has a compelling need to withdraw above the approved limit to transact legitimate businesses will pay a processing fee of 3% and 5% for individuals and corporate organizations, respectively. Aside that, the financial institution shall obtain the following information from the customer at the minimum and upload same on the CBN portal created for the purpose. Valid means of identification of the payee, which could be the national ID card, international passport, or driver's license. Bank verification number of the payee, tax identification number of both the payee and the payer, approval in writing by the MD CEO of the financial institution authorizing the withdrawal. Following the inability of the federal government to implement efficient ease of doing business policy, Nigeria has lost about 57.6 trillion naira to lack of 24-hour port operations. This was even as insecurity, obsolete infrastructure, and others have chased potential investors away from the nation's ports to the neighboring ports. Due to the huge economic losses, heads of federal government agencies in the maritime sector have resolved to implement actionable plans towards 24-hour port operations. Recall in May 2017, Vice President Yomi Osinbajo signed an executive order directing resumption of 24-hour operations at the Apapa port and prohibiting touting in all sea ports. Since then, the 24-hour port operation still remains a mirage, which caused economic loss of 800 billion naira monthly, according to shippers associations. And moving on, the Nigerian Upstream Petroleum Regulatory Commission (NUPRC) on Sunday revealed that crude oil production in Nigeria rose to 1.235 million barrels per day in December 2022, representing the highest output since March, when the country produced 1.237 million barrels per day. Figures obtained from the Commission in Abuja showed that oil production increased from 1.185 million barrels per day in November to 1.235 million barrels per day in December. We'll take a break now. When we come back, we have more business news for you. Stay with us. The recent increase in electricity tariff by power distribution companies, as approved by the Nigerian Electricity Regulatory Commission (NERC), shows that the federal government and DISCOs are taking Nigerians for granted, power sector experts and consumer groups have said. Speaking on the issue on Sunday, they demanded the federal government to order the power distribution companies to reverse the tariff hike, stressing that it came amidst a severe economic crisis in Nigeria currently. They also stated that power distributors increased the electricity tariff payable by consumers without following due process as contained in the multi-year tariff order. Since the hike in tariff was confirmed by a DISCO last week, several condemnations have trailed the development, despite the silence of the industry regulator concerning the issue. The Nigerian Exchange Limited (NGX) has recorded a turnover of 921.8 million shares worth 27.2 billion naira in 15,601 deals. This volume of shares traded was, however, higher than 1.8 billion units valued at 18.9 billion naira, which changed hands in 12,036 deals on December 30, 2022. The market opened for 4 trading days last week as the federal government declared Monday, January 2, 2023, a public holiday to mark the New Year celebration. At the close of transactions last week, the financial services industry led the activity chart with 616.5 million shares valued at 6.5 billion naira in 7,208 deals, thus contributing 66.8% to the total equity turnover volume. The industry goods industry followed with 138.3 million units worth 13.4 billion naira in 1,063 deals. The conglomerate industry ranked third with a turnover of 55.9 million shares worth 92.8 million naira in 502 deals. Trading in the top 3 equities, namely FBN Holdings PLC, Boa Cement PLC and Guaranty Trust Holding Company PLC, accounted for 450.3 million shares worth 17.2 billion naira, in 1,862 deals, contributing 48.9% to the total equities turnover. On the price movement chart, the bourse closed the first trading week of 2023 on a negative note as the benchmark index and market capitalization depreciated by 0.06% to close the week at 51,222.34 and 27.899 trillion respectively. All other indices finished higher except NGX Main Board, NGX Industrial Goods and NGX Sovereign Bond indices, which depreciated by 0.54%, 0.58% and 0.09% respectively, while the NGX ASM index closed flat. Freight forwarders have said there may be congestion of imported vehicles at the nation's seaports following the Nigeria Customs Service's decision to raise duty on imported vehicles by 10%. The agents accused the service of effecting 10% duty increase but failed to apply the 10% yearly depreciation value on imported used vehicles. The Deputy President of the National Association of Government-Approved Freight Forwarders, Nnadi Ugochukwu, wondered why the NCS started a new financial calendar in January when this was meant to be done in April. He said importers have to pay based on 2014 model, even if the vehicle is a 2008 model. So it is true the NCS has raised duty to 2014. Normally, their new calendar is supposed to start by March. This has made imported vehicles to become trapped at a port. Customs increased duty by 10% but refused to implement the 10% annual depreciation. Reacting, the National Public Relations Officer NCS, Timi Bomodi, said the development was based on government fiscal policy on age limit. A report by Money Africa has said that Nigerians need to get out of bad debt to survive the financial challenges in 2023. It's noted that the residual effect of the pandemic, Russian-Ukraine war, and high inflation had affected the finances of Nigerians and led to loaning from every means possible to survive. In a report titled 2023 Optimism, Making the Best of a Potentially Challenging Year, it said that in Nigeria, the elections were going to be pivotal to how the year would turn out. It stated that regardless of the problem of slow growth, high inflation and high unemployment would persist. These problems could be worsened by the phasing out of petrol subsidies and the sustained depreciation of the currency unless all exports recover strongly. According to the report, in a bid to fight the low tolerance of inflation, the central banks of countries raised interest rates. This had the greatest impact on personal finances since 2008-2009. Many economies slowed down, prompting fears about a recession, which also led to job losses. Higher interest rates also led to a reduction in personal wealth as assets people invested in, bonds, real estate, stocks and cryptocurrencies lost a lot of value. The report added that to mitigate emergencies, individuals must invest in insurance. The Nigerian Upstream Petroleum Regulatory Commission has revealed that crude oil production in Nigeria rose to 1.235 million barrels per day in December 2022, representing the highest output since March when the country produced 1.237 million barrels per day. Figures obtained from the Commission in Abuja showed that oil production increased from 1.185 million barrels per day in November to 1.235 million barrels per day in December, indicating that the effort of the federal government and security agencies in curbing oil theft was paying off. Crude oil production in Nigeria had crashed to as low as 0.937 million barrels per day in September. That's 937,000 barrels per day in September last year, which was the lowest output recorded in Nigeria in several years. The crash in oil production was attributed to the activities of pipeline vandals and oil thieves in the Niger Delta, a development that also made some international firms to leave Nigeria. According to figures from the NUPRC, it showed that crude oil production without blended or unblended condensates in January, February, March, April, May and June were 1.398 million barrels per day, 1.257 million barrels per day, 1.237 million barrels per day, 1.219 million barrels per day, 1.024 million barrels per day, and 1.158 million barrels per day, respectively. For the months of July, August, September, October, November, and December, the oil production figures were 1.08 million barrels per day, 0.972 million barrels per day, 0.937 million barrels per day, 1.014 million barrels per day, 1.185 million barrels per day, and 1.235 million barrels per day, respectively. On Thursday, the President, Muhammadu Buhari, ordered security agencies to eradicate crude oil theft and pipeline vandalism in the Niger Delta before May 29, 2023, in order to effectively ramp up the country's oil output. He said the federal government could no longer tolerate the criminality. Buhari gave the directive through the Minister of State for Petroleum Resources, Chief Timothy Silva, while addressing troops of the Joint Task Force Operation Delta Safe in Efuru, Delta State, and Port Harcourt, Rivers State. And moving on, latest data from the Central Bank of Nigeria has shown that gross external reserves lost $3.45 billion in 2022, due mainly to Nigeria's inability to reap immensely from the oil price rally and other foreign exchange sources. This signals an 8.5% decline in 12 months, and the steep decline in the gross reserves trend can be principally attributed to increasing pressure from the foreign exchange market and the low receipts from crude oil. Nigeria's official gross reserves kicked off the new year 2023 at $37.07 billion and still stay below the $40 billion mark in 12 months since early February 2022, when they printed $40.01 billion, defying all odds of climbing back up the ladder. This is despite the positive rally in crude oil prices on the back of the Russian invasion of Ukraine. Thus, the data showed that the total reserves as of December 2022 could cover an average 8.4 months of merchandise import on a balance of payments basis and a bit over 6 months when services are included. In 2022, the Naira lost almost 9% of its value against the greenback, despite the significant interest rate hikes by the U.S. Federal Reserve. According to analysts, on the other hand, addressing the issues of crude oil theft and vandalism with efforts to increase production to a significant level can be a boost to petrodollar earnings for Nigeria and in turn improve its reserve levels.